If you want to start a business in 2026, you can't just look at the trends on social media. You need to understand why they're happening in the first place. Because every few years, the global economy quietly rewires itself, technology shifts productivity, culture shifts demand, and policy reshapes incentives. What looked random on the surface, AI tools, remote work, and eco branding, actually follows predictable economic logic. In this video, we'll break down the forces shaping 2026 and how you can position yourself at the center of those shifts, turning macro trends into real opportunities. Let's start at the macro level. Economies evolve around productivity, and 2026 is defined by the most rapid productivity shift since the internet itself, generative AI. AI is collapsing the cost of creation and coordination. Tasks that once required salaried teams are now performed by one skilled individual with the right tools. In economic terms, it's a labor efficiency shock. It doesn't eliminate human work, it changes its composition. The comparative advantage moves from execution to orchestration. People who know how to use AI become the new high value labor. For entrepreneurs, this opens a second order of opportunities, not building AI itself, but selling the infrastructure, education, and integrations that help others use it effectively. The digital version of selling shovels in the gold rush. The second transformation is the digitization and decentralization of work. Remote work didn't fade after COVID, it matured. Corporations realized geography is optional and cost arbitrage became strategy. Hiring now happens globally while fixed office expenses vanish from balance sheets. This has turned entire cities into virtual economies, creating new demand for tools that coordinate distributed labor, project management, digital communication, asynchronous collaborations. In macro terms, we are witnessing a reallocation of capital from physical infrastructure to digital efficiency. Then comes sustainability and the green economy, which is no longer moral signaling but financial logic. With carbon regulation tightening and energy volatility reshaping supply chains, green operations now reduce risk and improve margins. Investors reward ESG transparency with lower borrowing costs while consumers reward it with loyalty. Even small firms benefit if your product lasts longer, uses fewer materials, or communicates ethical clarity. You're competing not on price but on trust, a much more defensible asset. Meanwhile, data privacy and regulation have become the new frontier of compliance economics. After a decade of unchecked data extraction, the pendulum has swung towards protections. Laws like the EU Digital Service Act and emerging US and Asian frameworks are forcing even small firms to treat privacy as a competitive edge. Entire sectors are forming around security SaaS, compliance automation, and consumer trust management, what economists would call the institutionalization of digital accountability. Finally, the democratization of technology and the creator economy are merging into a single phenomenon, the decentralization of entrepreneurship. Platforms like Webflow, Notion, and Bubble are turning software development into a creative act rather than a technical one. And creators, once individual freelancers, are now micro enterprises, monetizing expertise at near zero marginal cost. In effect, the barriers between worker, founder, and brand are collapsing. Anyone who can organize attention and deliver value now plays in the same market as a traditional business. These aren't random fads, they're structural changes in labor, capital, and consumption. So, how do you turn them into a business model that actually work in 2026? Let's translate these forces into 5 ideas that directly leverage the new economic landscape. AI isn't just about speed, it's about lowering the cost of coordination. Businesses today drown in repetitive communication. Websites, emails, product descriptions, every word costs time. An AI native service that automates branding, web design, and copywriting solves a real inefficiency. You became not a writer or designer, but a system integrator, the one who turns scattered AI tools into a coherent output engine. In economic terms, this is arbitrage. You bridge the gap between what AI can do and what businesses understand how to use. It's scalable, high margin, and future proof. We are shifting from institutions to individual capital. Consumers no longer trust corporations, they trust people, and in an economy of infinite content, credibility becomes currency. Creating a community around a skill, interest, or worldview is more than audience building, it's microeconomy formation. Once trust is established, value layers follow naturally: memberships, consulting, or live learning. AI tools amplify your reach, but authenticity anchors it. This model mirrors the macro trend toward decentralized markets. Value distributed across many small nodes rather than a few large players. Sustainability's profitability lies in durability and differentiation. A sustainable product often costs more upfront, but it retains customers longer and builds emotional equity. In aggregate, that changes demand elasticity. Consumers become less price sensitive because they buy into identity. Launching niche eco products, whether minimalist design goods, recycled accessories, or biodegradable packaging, aligns you with a growing market where transparency is the differentiator. And unlike many trends, sustainability compounds. The earlier you build credibility, the stronger your pricing power over time. Digital infrastructure has become modular. Most startups and agencies now assemble workflows instead of coding them, meaning every building block of productivity can be monetized. If you create templates for Notion, Airtable, or Webflow, you're essentially manufacturing digital capital goods. They reduce friction, save time, and sell infinitely without additional cost. This is the purest form of scalability: one creation, unlimited replication. It's not just passive income, it's the productization of efficiency itself. The global economy may look interconnected, but consumer behavior is fragmenting. People identify with macro cultures, aesthetics, politics, hobbies, values. Each of these fragments represents its own demand curve. A small brand that speaks fluently to one identity can outperform a corporate giant chasing everyone. That's why microbrands are thriving. They sell meaning per dollar, not just product per dollar. When combined with smart digital infrastructure, AI-based design, community engagement, and transparent sourcing, even the smallest company can look and operate like a large one. But the real economic leverage happens when you connect these ideas. You could build AI websites for eco-brands, use that network to launch your own sustainable product line, and document the process to grow a community, each layer reinforcing the other. What you're building isn't a single business, it's an ecosystem of synergies. Content drives trust, trust drives sales, and sales drive brand equity. It's a flywheel model: low fixed cost, high compounding return. In economics, that's the essence of scalable growth. 2026 won't reward size, it will reward clarity. Those who understand the direction of capital, technology, and human attention will build lighter, faster, more adaptive businesses. The opportunity is no longer in predicting the next app or platform, it's in interpreting the forces shaping why people buy, work, and create the way they do. And that's where the next generation of entrepreneurs will find their edge, not by chasing the future, but by understanding the economics driving it.